All right, you're welcome back. In this lesson, we are going to be discussing supply and demand. But just before we go into the discussion, I also want to let you know that there are a couple of strategies that people employ in trading financial market. Um, Basically, um, there is no holy grail, but we only find what really works for us. Because some people in this market, use trend lines. When they're actually making their trading decisions, they use trend lines, they use support and resistance. Some people use smart money concept. Some people use the money makers, that's BTMM. Some people use, various types. Some people even use indicators. Now, there is no there is no best strategy. People just find what works for them and they simply settle for that. For me, this is what really works for me, because this particular concept actually works for me over 95% of the time. Over 95% of the time. So that is why I'm going to pour everything I know on this particular concept, supply and demand. And I really want you to have an understanding of how it works. Please pay attention to every single part of this model from this point, forward. All right, so let's quickly dive into that. So the first thing you need to understand in the market is that there are basically two categories of traders in the market. Basically, especially when it comes to stocks, when it comes to forex, that is foreign exchange market. Talking about commodities like oil, like some other stuff like cocoa, like commodities generally. I'm talking about metals like gold, like silver. The market of these stocks are basically dominated by the institutional traders. Okay, the first of the category is actually what? The institutional traders. They are the banks, the hedge funds, the mutual funds, and co. Those are guys with several millions of dollars to really, to pump into the market every single day. Every single day. So it means that for individual traders like us, we fall into the category of retail traders. Okay, it doesn't matter what you, I mean, if you're, it doesn't matter even if you're trading with like $100,000, $200,000, even $500,000 in some cases. It doesn't change the fact that we are still retail traders, right? We are retail traders. Now, you need to understand the fact that in this market, the institutional traders actually determine the direction of the market. They know how retail traders think, they know how they place their trades. They actually, they have certain knowledge about how retail traders think. And because of that, they have this way you know, of actually, taking money away from retail traders who are amateurs, who doesn't really know how these institutional traders actually move in the market. Now, look at look at the screen. Um, it's like we are liking this particular concept into um to an ocean where a shark, is actually, eating or feasting on those smaller fishes in the ocean. Now, what smart fishes or smart traders do is to simply follow the footprint, is to simply just follow after the big boys in the market, to really, to really see how institutional traders, how they actually move in that particular market, how they move, what is their move, how do you recognize their move? You understand? So when those institutional traders are actually going after the money of amateurs in the market, all you want to do is to simply just follow them bumper to bumper, like we will say in Nigeria. You simply just follow them, and when you spot the footprint of those big institutional traders, all you have to do is what? Simply just follow. Just take the same traits they are taking, because you already understand how these people really think. So you're taking the same trait they're taking, as as they're making money, you too, you are making money. You are joining them to really take a big chunk of money from the market, right? Okay. Now let's quickly move on. Now, banks and financial institutions, they have certain zones where they buy and sell in the market. And if you can identify them, which is what I'm going to be teaching you in the next set of tutorials, you will take the same trades they take, you will make money with them instead of trading against them. As a matter of fact, you don't want to be trading against the institutions in the market. Whatever your strategy is, you don't want to go against the tide. The trend is your friend. In I mean the footprint of the institutions in the market, they are very essential for you to understand in order for you to actually make money, right? Okay. So so going forward, we need to understand that the markets are ruled by the law of supply and demand. If there is nobody to make demand, there is no point for anybody to do the supply, right? So it is actually ruled by the law of supply and demand. So prices go up and down because of the imbalance in supply and demand. When there is higher supply in demand, or sorry, when there is if supply is higher than demand, the prices go down. And if demand is higher than supply, price will simply just what? Will simply just go up. It is just what it is. It is just like every other thing, every other commodity. If you go into market, let's say for example, you have a lot and lots and lots of mangoes, for example. And of course the people know that, and the sellers, they know that they have competition everywhere, and there's so much mangoes everywhere. And when that happens, what happens? The price what will simply just go down. But when you have very limited quantity in the market, and there are a whole lot of people who wants to buy mango, what is going to happen? It means that the little quantity is going to, the price for those little quantity will go up. Why? Because the demand is higher than the supply, so the price we have to go up. But when we have a lot of them in the market at the same time, and you don't really have a whole lot of buyers coming for them, what is going to happen? The price will certainly what? Will certainly go down. So it is just what it is. All right. So let's move on quickly. The markets are dominated by big investors such as central banks, hedge funds, market makers, and other financial institutions. Now, these investors are also affected by some factors that influence their trading decisions, such as daily news, you know, coming from different central banks all over the world, coming from the government of different countries around the world. Especially if you're going to be playing in the stock market, if you're going to be playing in the forex, in the forex market, trading, trading currencies, trading metals, trading commodities, you will have to pay attention. You will have to pay attention to those economic news, okay? Because they are the things that really affect the decisions of these institutions, these big institutions, in placing their trade, right? Okay. Now, one of those one of those app that really help. I think I'm going to be, I'm going to be doing something around that. I'm going to write something, I'm going to write it out at some point for you. But for now, you can just go to www.investor.com, or you download book, my FX book from the Play Store. But my preferred app from that Play Store is FX Hours. FX Hours. Written together, FX Hours. I'm going to do other I'm still going to do other tutorial on that. So from those apps, or from that investor.com, you we have an idea of the kind of news that is actually coming. When you have a news with red, with when you have news that's going to be, uh with red something in front of it, that is actually telling you that that particular news is going to be of high impact. And when you have a medium, which is going to be yellow, it's going to have medium impact. And when you have other colors, sometimes it's blue, sometimes it's green, depending on the app. So it's mean that with those one are simply going to have very low impact on the market that particular day, right? Okay. Now, so from the next set of tutorials, I'm going to be showing you how to really follow the footprint of the of the market makers, of the institutions in the market. See you in the next one.